In today's video, I have a clean energy penny stock that is looking very undervalued right now. This NASDAQ listed company only went public this year, but after initially running to over $40, it has now dropped to under $1, pushing the company's market cap far below the reported enterprise value. In today's video, I will be talking about XCF Global, ticker symbol SAFX. Despite the huge drop, there has been some great news from the company in the past week, and the stock is up about 20% since Friday morning. Could this be one of the most oversold stocks of the month? Stick around to find out why a massive reversal might be just around the corner. Now, we've got a lot to get through in this video, so I will try to keep this intro short, but if you find any value in this, can I ask you to smash the like button? I'm aiming to get 500 likes on this video. Help me hit that goal. Subscribe to the channel if you're new and hit the bell notification so you don't miss out on any new content like this. I want to point out that I'm not a financial advisor and this is not financial advice, so always do your own due diligence. And I would really appreciate it if you could try to answer the question later in this video. Now let's get into it. So today I'm talking about XCF Global, ticker symbol SAFX. XCF Global is a pioneering synthetic aviation fuel company dedicated to accelerating the aviation industry's transition to net zero emissions. They are the first publicly traded pure-play sustainable aviation fuel producer in the United States. XCF is developing and operating state-of-the-art clean fuel SAF production facilities engineered to the highest standards, and the company is actively building partnerships across the energy and transportation sectors to accelerate the adoption of SAF on a global scale. The company utilizes non-food feedstocks such as waste oil, fats and agricultural residues to produce SAF that can reduce carbon emissions by up to 80% compared to traditional jet fuel. SAF is widely accepted as the only viable near-term option to decrease emissions in the aviation sector, and with the world's need for greener alternatives to oil, the demand is beginning to be seen now, which I will talk about in just a moment. XCF holds strategic early mover advantage with an actual operating SAF production facility in Reno, Nevada. New Rise Reno was commissioned in February and has estimated annualized production capacity of 38 million gallons of renewable fuels, with the second facility expected to launch in 2027 with an estimated 40 million gallon production capacity. But that's not all, because XCF are planning to open 2 more facilities in Florida and North Carolina in 2028. XCF issued a new investors presentation just last week. So looking at the latest investors presentation, we can see that XCF is dedicated to accelerating the aviation industry's transition to net zero emissions. We can see that they currently have 30 million gallons of annualized SAF production capacity, with expected 80 million gallons of capacity in 2028. Make no doubt about it, XCF is ahead of its competition. They hold an early mover advantage and a site design that can be replicated across the world. Now, this is something that I will talk about later in the video because there has been some great recent news on this. The aviation industry provides a large opportunity due to its historic reliance on fossil fuels, but McKinsey analysts stated that SAFs are the only viable near-term option to decrease emissions in the aviation sector, and they are comparable with current aircraft engines and fueling infrastructure, and the aviation industry is working to decarbonize. As we can see here, major airlines like Delta and United, and also major logistics companies like DHL, UPS, and FedEx have all signed up to drastically cut fuel emissions over the next 5 to 10 years with the plan to eventually be net zero. Now, net zero is the long-term goal. This is still many years away, but the work to get there has already started to get underway. And this is being enforced by governments too. The US targets 35% lower emissions in the next 10 years and has said annual increases in renewable fuels, allowing for an opt-in for SAF, while in Europe, they are committed to reducing emissions by 55% over the next 5 years, with a mandate of at least 10% of jet fuel to come from sustainable sources over the next 5 years and 75% by 2050. So the SAF industry is a huge opportunity that is very much at the beginning stages in terms of growth. The closer these targets get, the more demand for SAF will increase. And XCF is partnered with some of the biggest players in the industry. There is a long-term agreement in place with Phillips 66, an established Fortune 50 company, who will supply 100% of the feedstocks and is a priority buyer for SAF and renewable diesel produced at the New Rise Reno facility. This is a 15-year contract with one of the biggest companies in the world, but XCF Global has many other deals in place. On Monday, they announced that they have entered into a memorandum of understanding with BGN, a global renewable fuels trading, marketing and distribution company, to explore developing a global distribution and logistics partnership for SAF. XCF and BGN intend to evaluate opportunities to collaborate on renewable fuel production across multiple regions around the world, including Europe and the Middle East. The proposed framework includes offtake and co-branded distribution agreements, as well as joint development of renewable fuel production capacity. In addition, the proposed strategic partnership seeks to promote the use of XCF's SAF within industry trade associations and OEM networks. So this could be huge for XCF Global and sustainable aviation fuel as a whole. As stated by new CEO Chris Cooper, partnering with BGN would enable us to extend our footprint and accelerate commercialization on a global scale with a world-class partner, as we prepare to meet surging demand for aviation fuel. And we are still at the very beginning of this demand growth. Now, if we look here at the sustainability report by Bloomberg, we can see that we are still at the very beginning of the switch over to sustainable aviation fuel. And the airline industry has set the goal to become net zero by 2050. Now, while 2050 is a long way away, there is a lot of room for growth over the next 2 decades. Because as of 2024, SAF currently represents a small fraction of total aviation fuel consumption, estimated to be less than 1% of global jet fuel use. But things are beginning to change quickly. Sustainable aviation fuel investors expect a 100x growth in the next decade, and XCF is said to be at the forefront of this as they scale production up over the next few years, which we've already seen. They are forging partnerships with airlines, energy companies, and fuel distributors to create long-term supply agreements, and continuing innovation in SAF technology will be the key to ensuring widespread adoption and sustained industry transformation. XCF Global also signed a deal with Impact Jets at the beginning of November to supply private jet market with sustainable aviation fuel. Impact Jets will launch a new, powered by XCF SAF program to onboard private jet operators and clients into direct SAF purchasing through XCF. With access to Impact Jet's network of about 130 operators, XCF will supply fuel and manage logistics. The initiative is expected to bring XCF access to a premium customer segment and expand the reach of its fuel beyond commercial airline partners. With private jet operators known for rapid adoption of best-in-class, reputation-enhancing technologies, the rollout would position XCF at the forefront of sustainability within private aviation. So far, this is a largely untapped market, but as we've seen already, SAF adoption is expected to grow massively over the next few years, and XCF are doing everything they can to be at the forefront of this market. Earlier this year, the then CEO of the company was asked, "Where do you see XCF Global in the next 5 to 10 years?" To which he answered, "We expect XCF to be a global leader in SAF, recognized for delivering clean, reliable, low-carbon fuel solutions in aviation. We plan to be operating multiple facilities in the US and beyond, supplying major airlines and energy companies." I mentioned earlier how the XCF Global design can be replicated across the world, and just a few weeks ago they announced signing a binding term sheet with New Rise Australia to accelerate the development of renewable fuel production facilities across Australia. This is a 15-year exclusive license to deploy XCF's modular scalable renewable fuel platform, targeting development of 3 renewable fuel production facilities, and XCF is to receive a 12.5% equity stake, as well as licensing fees and a seat on the New Rise board. Now, this is important because Australia imports about 80% of its liquid fuels, spending more than $50 billion in 2023 alone, while exporting around $3.9 billion of feedstocks. But now the Australian federal government has prioritised low-carbon liquid fuels under its Future Made in Australia initiative, providing access to $1.7 billion fund to support the development of an LCLF industry, which includes SAF and renewable diesel. This move will put XCF Global in a prime position for the likes of major airlines like Qantas and Virgin Australia, who are targeting net zero. Demand for locally produced SAF is expected to surge, creating strong momentum for investment and development across the region. But guys, what do you think of XCF Global? The SAF market is experiencing a period of rapid development right now, but this is only the beginning. Drop a comment below and let me know what you think. But remember that I'm not a financial advisor and this is not financial advice, so I highly recommend you do your own due diligence on XCF Global stock. To learn more about XCF, check out the links in the description below. Thanks for watching and I'll catch you in